day all. Ira Epstein of Linn Associates with your agriculture update for this particular Tuesday, and we are now at the 16th of April, 2019, just after 2:20 p.m. Central Daylight Time. As you can see, the stock market up again. It appears that Apple and Qualcomm have reached a deal. It has kicked Qualcomm up sharply higher, carrying the NASDAQ with it and other components there into the marketplace. The dollar still a little bit stronger, but metals unable to withstand the pressure of the stock market, and competing interest rates, which are almost back in the 10-year to 2.6. I was just on Fox News mentioning all this and saying, you know, it's good to not have interest rates down at 2.44 where the market's scared something real bad's going to happen. I don't want them at 3% either in the 10-year, but a norm here looks good. The stock market, there's still people not in the marketplace. And what is this week? This is a funny week. The markets aren't open on Friday. Some markets close a bit early come Thursday for the Good Friday holiday with Passover and Easter. And other people are away with the families, not doing much. In the grain market, the farmers are getting ready to go in the field, and many have to make key decisions now. Do they switch planting? What do they do? Because China is not going to come to the rescue for the old crop grains that we had. We're putting new crop in at this point. Let's assume a trade deal gets something done. I don't know. We're already at April 16th. Maybe if we're lucky, May or June. What does that do for the farmer? And that's why you're seeing the pressure stay on the grains. He's the odd man out still. And you can see how this market's moving down here. You can see the breakout to the downside on a daily chart that happened today. This is what we looked like coming into today. And the hard part here is, which way does this market go? It got caught in this trading range, and suddenly today it's decided to make a stab to the downside. Now, it still has to fight to get through these old lows right through here. But with today's action, you now have a pattern of lower highs, lower lows. You did not have that in place yesterday. Now you have that. The market is trading underneath the 18-day average of closes, which is also under the 100. So it puts into play the Bollinger Band as one of the potential support numbers. That comes in at 884 3/4. And as you can see, it was support back here. It acts as support in these levels. Can you slap through it and go by a few cents or more? Sure, but that's not what it's about. It's about a zone. We expect to see the pros take some money off the table. And I think that's facing you right now. And market momentum is not oversold. Normally I'm saying you're down here, you're getting oversold. Nah, if this market wants to punch through there, it's got the momentum. So it's got a trend that's down. The bias is down since it's under the 18-day average of closes, and momentum is pointing down. Even if, by the way, you took out yesterday's high of 902, you'd end up with the lower low, higher high. So the bears have good control. I'd look for them to defend their position at that 18-day average of closes. I'll give you a market that gave you the whip around. This is it. Yesterday, all systems, not in terms of the trend, but all systems, you had come up to the last highs. If you kept going, I'm looking for the 100-day average. And it was not a trend because you had a lower low, higher high. But momentum had turned up. Market up yesterday, $3. Today, the market down $4.50, wiping that phase out, taking out the previous break low. Still not a trend. Now you've got the higher high, the lower low. So if you want to get whipped, these are the kind of markets that will whip you right here. In the soybean oil, a little support comes in as the traders that were playing in the crush spread, the meal more favorable than the oil. Well, oil gained back some of that favor as meal was down $4.50 today and the oil only down 9 cents. But the oil is in a downtrend. It's got lower highs, lower lows. The bias is down. Momentum is down. I look for the bears to defend their positions in the 28.84. And if the bean complex lets go at all, the potential's here for that 28.42 area. In the corn market, you negated this last rally that we had. Remember yesterday I had said we have higher lows, higher highs. If the market continues up, I look for the 18-day average to be the resistance. If you break down through 358.5, you still don't have a trend. You'd have a higher high, lower low. And guess what? That's what you did. You broke back down, didn't make it to the 18. You still don't have a trend, and you are in oversold territory. very, very hard to make something out of nothing, and that's what you've got there. The wheat market has continued and trying now to push out of this sideways action. Let's go to the past few days. Notice how the Bollinger Bands are sideways. Yesterday, no real clue other than to say lower highs, lower lows, trend down, bias down, 18-day average resistance, momentum pointing down. Now, you're right against support of the lower Bollinger Band at 456 3/4. Today, the market starts pushing on it. Tomorrow is the day, more times than not, it tries to get back into the band. But if it can stay out of it like this, it starts taking this sideways action as energy and just pushing on these prices. And you could drop here another 15, 20 cents if the market really wanted to push on it. In the sugar market, lower highs, lower lows, lower Bollinger Band in play. First challenge of it normally acts as a bit of support. That's at 1241. Momentum down. Everything bearish on that chart. The coffee market into a stall. It got underneath 2 days ago, the lower Bollinger Band, then stepped back over it, but not running away from it. That's still bearish action. You still have the pattern now of lower highs, lower lows, admittedly oversold, and admittedly on the lower Bollinger Band. So let's assume the market rallies, just the opposite. If you take out 91.70, you could end up with higher low, higher high pattern. The dilemma is you've got resistance where the market keeps failing at that 18-day average of closes. That's been the problem here. In the cocoa market, one of the things I'm pretty sure I said yesterday, in fact, I know I said it. I said, watch the opening tonight and be careful. The market closed at the bottom part of the day's range, and the way the numbers were set up, you could easily lose that embedded reading. In other words, take the red line under an 80 reading. Now, that doesn't mean it's going to close there, but it's a warning sign. Certainly taking out this low right here of 23.90 would be a very bad sign because you've already got then the lower lows, lower highs. Guess what number you went right to on this? You lost the embedded reading. You went to the 18-day average at 23.44, bounced 20 points, but that's what the market was looking for. It held its first support. The trend is down. The bias is up since it's over the 18-day average, and momentum has got to work out of an overbought condition now. In the cotton market, I thought cotton would have more resistance, frankly, at the 18-day average of closes than it showed today. Yes, if we go to yesterday, you can see how the market got down to the lower Bollinger Band on the 100-day average. I was figuring if it got up into that 77.40 area to see enough resistance there. Now what it can do is negate the bearishness by taking out this high up here, which is 78.65. If that's not taken out and the market starts down again, you put back into play the 76.03 to 75.90 level. Momentum in the market, it had been pointing down. You can see that. It neutralized itself today, but it is not pointing up. Tomorrow's going to be the key day as to what this market can do. In the cattle market, let's back off. Here we are yesterday. Higher lows, higher highs. We don't know where this high is going to end. If the market makes a run, one of the numbers it could go to is the upper Bollinger Band. Support would come in at the 18-day average if it breaks. And if you were to take out this low of 120.05, you break the bullish pattern. What the market did today runs right up, gets to the upper Bollinger Band, as you can see, and just stalls itself out very close to that number and pulls back a little bit. Still very much in the uptrend, but now in overbought territory. Feeder cattle, overbought, in an uptrend, hasn't quite hit its upside target. Doesn't mean it has to, but it's still in play there. The dilemma in buying fresh longs is you're overbought already. And in the hog market, it seems the market goes up, comes back, goes up, comes up. We were talking in the office today, and one of the traders here was saying, the smartest thing that he's telling his clients to, doesn't mean it's right, by the way. He thinks it's the smartest thing, is take some money that you just don't care about, which is hard for some people, but buy some out-of-the-money calls and just assume that China's got to keep buying and that you'll get chopped apart on the action in the futures. But the call, if he's right, and that's the big if he's right and prices are going to advance another 15, 20%, if China's going to be the big buyer that we're all hoping for, Well, that's one way to catch it. You could also buy calls, write a further out of the money call. The problem is the leverage in the futures in a thinner type market like this. That's the point that he was making. You know, during a day like today, especially for the grain trade, I'm forever looking at these pivot points because they offer the opportunities within them if you understand them. First off, the grains are moving intraday pretty nicely. Number two, if you understand the formula that uses the previous day's high, low, and close, you come up with a number that's what they call the pivot point, the white line. Above it, most people put, from the formula, 2 resistance points and 2 support points. We'll call them R1, R2, support 1, support 2. You'll see them on this chart as they all come in without the label. And what you're trying to do is either buy at the supports, kicking out on the rally, or sell at the resistance, coming back at the pivot. But use momentum with it. And that's the one thing I do. So I created a 3-part video series, very simple to understand, that shows you this, and especially for those of you that don't like to go home with positions at night, you're looking for more or less the in and out trading, this might be one of the tools you put into your arsenal. How do you get it? It's really simple. Go to our website and either sign up for it on our carousel of free offers, call my staff at 866-973-2077 or click up here. It'll take you right to our page where you fill out all the stuff you need. I'm Ira Epstein. You have a good day. Talk to you tomorrow.